All right, good afternoon, everybody. Testing 1 2 3, testing 1 2 3. Type S in the chat if you can hear me and see my screen, please. I should say good morning, good afternoon, or good evening, depending on where you are in the world. How's everybody doing today? Hey, what's up, Craig? I hadn't seen you in a while. How's everybody doing? All right, is the audio good? All right, folks, let's go ahead and get started. Welcome to the presentation. My name is Silas Peters, founder and head trader of Seasonal Swing Trader. You are here to see hidden forces that generate explosive gains in any market. It is 4 p.m. Central, 5 p.m. Eastern, where I am at. I'm located in LA, Lower Alabama, on the Gulf Coast, on Mobile Bay, deep south, and we're excited to be giving you this presentation today. So, looks like we're good on sound, good on audio, and let's go ahead and get started here. I'm sorry we're about 1 or 2 minutes late. We had some folks coming in. Want to make sure everybody gets a chance. So I hope everybody's doing well currently, wherever you are in quarantine, surviving the corona conundrum. Hope everybody's safe and healthy first and foremost. That's the most important thing. And then also hopefully you are staying safe in the marketplace. So if you've ever been on a call like this before, it may be a little bit different from what you've experienced in the past. I really do want to help you walk away with something you can begin applying today. And in fact, we're talking immediately. Before we get started here, let's read our ever important risk disclaimer as required from our friends at the regulatory governing bodies and our attorneys who require us to share. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So everybody pretty much knows that, or at least I hope you do. Don't trade with your rent money, your mortgage money, your milk money, your children's educational funds. You can lose money in trading. Where's everybody at? Where's everybody tuning into from the world today? It's been a very busy week. Markets have been on the move. Where's everybody tuning in? So yeah, Doug knows the key to my heart. He said roll tide. So we've got Westchester, Pennsylvania, New York, Utah, Albany, Orlando, Montreal, Montana. Glad to see you've got some internet out there. Winnipeg, London, UK, Wells, interesting, Toronto, influential, DC. All right, guys, cool. So people from all over, it's always really interesting to see where everybody's coming in, tuning in from. There we go, Atlanta, Kansas City. It's just amazing, this thing, technology. So let's go ahead and get started. So on to the good stuff. My goal for this presentation is pretty simple. If you're just a new trader looking for a simpler way, or a more experienced trader looking for a better way, or really looking, or like the rest of us and looking for a more profitable and predictable way, then you are on the right presentation. I have you covered. In fact, I have a promise. What is my promise, you ask? Well, you're going to see how you can start experiencing explosive gains within your trades, all by paying attention to and trading in conjunction with the hidden forces that drive the markets. How explosive are we talking? But number will vary a lot, but in one of the case studies I'm going to share with you, we're going to talk about a trade that we caught that increased by nearly 42.5%. I know that may not sound like much. You're used to seeing probably emails or webinars, things like that, talking about 800% gain, 2,000% gain overnight. But this is a trade that equated to nearly $20,000 per contract. I shared with members of my community, and several of them took action with it, and they did very well for obvious reasons. And I found it all by using the strategy I'm going to be teaching you today. And these happen over and over again, and I'm going to prove it to you at the end of the presentation when we look at some charts and past trade examples. But I want you to stop and think for a minute. Can you imagine what it would be like to experience that kind of trading success yourself? To not just clear several $1,000s on one trade, but to be able to see those kinds of gains on a regular basis. What would it mean for your family, for their financial future? What about your friends and colleagues? What would they say when they see things change for you and you're doing it by yourself and not depending on a broker? Do they think they respect you more? Will they look at you differently? Can you imagine what that would feel like? These are trades that can literally change your lifestyle. So that's why this presentation is so important, because I really do believe what you're about to learn here is going to help move you towards achieving those financial goals. So now it's time to shut everything down, remove all distractions, close your browser tabs, log out of Facebook, put your phone on mute. We're going to be together for about 60 minutes or so. Even though we are recording, I can't guarantee there'll be a replay, so make sure to listen closely. So with that being said, let me properly introduce myself. My name is Silas Peters. I'm a proud husband, also proud father of these beautiful blonde-haired, blue-eyed beauties on the right in front of my alma mater at the University of Alabama. And 3 days after I graduated UA, I sold my car, I packed up my belongings, and I drove north. I drove straight north to the great city of Chicago, the Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And here where I was really bitten by the trading bug and never looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spectators, and the like. I've also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales, and support. And then I've also worked as a private family investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But it wasn't always easy. There was a learning curve. In fact, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School cannot teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that I was, but ignorance and greed cost me my profits. I blew up an account. I blew up a few others in what I like to call revenge trading. I'm sure most of you can attest to that or have some type of experience. If you don't, you get a gold star on your crown. I finally went back to my roots, settled down, worked my process, and found overall consistency. But after all that time working as a broker, trading for others, and now educating and supporting traders like yourself, make no mistake, I firmly believe that you can see success as a trader, but you're really going to need two things to make that happen. You're going to need a strategy to follow, nothing too complex or you won't even bother with it, and you need to take action. So let me ask you an important question. Are you done? Are you done struggling and ready to experience some success and growth in your portfolio? Are you done spending hours upon hours of analyzing charts but never taking action? Are you done subscribing to dozens of expensive newsletters, promising some hidden secret but never even having the time to read them all? So let me see where you are here in the comments. And I already see some questions coming in. And I appreciate that. Ask all the questions you want. I do want to reserve this time slot to get through the meat of the presentation. I promise I'm going to come back and answer everybody's questions. So I do see a lot of people type in and say, yes, obviously that's why you're here. You are looking for a better way and perhaps even a better way. And that's what we're going to be covering, the easier way. And that's understanding that there are hidden forces in the markets, and when you learn how to leverage them, you can see some darn near explosive gains. And again, this strategy will work in any market, whether you trade stocks, forex, options, or futures. So during this workshop, we're going to focus in on three big ideas that I really want you to pay attention to, because when you get these, it should be smooth sailing. First one is a hidden in plain sight pattern most traders miss and how you can benefit from those immediately. Next, I want you to clearly understand what data you must focus on and what you can ignore so you can trade in confidence. And finally, I'm going to show you a way that will shorten the time you spend analyzing charts, all by utilizing a simple 3-point strategy. So forget about all the other noise. We're going to keep it straightforward and simple. So let's dive in and talk about the hidden in plain sight pattern most traders miss and how you can benefit from those immediately. So what are these hidden forces in the markets? Simply put, they are historical data patterns, also known as cyclical patterns or seasonal markets, which have been scientifically proven to beat out every other traditional investment strategy. It's true. A recent study analyzed over 200 years of data across 68 markets where they reviewed the returns on several different investment strategies. You can see here that trading off of seasonality outperformed all other strategies. So it's hard to beat 200 years of proof. So let's get into what these cyclical patterns actually are. Now, a market can be classified as seasonal when it has a unique or specific demand during different times of the year. Cyclical markets follow the general trajectory of the economy or are based on weather or planting seasons. A few other not so obvious factors that influence repeatable behavior include tax seasons and fiscal policies set by world governments, as well as the movement of large amounts of capital by institutions, banks, hedge funds, and the like. But the most common denominator is that all these markets and patterns are repeatable. They happen over and over again like waves crashing on a shore. So the key is knowing when that wave is coming in and then learning how to ride it. So let's look at some familiar examples. What do you think the price of Walmart is? When do you think the price of Walmart is going to rally the most? Right after Thanksgiving. Why? Because there's so many Christmas sales that take place at that time. In fact, one of the very best trades you'll ever hear is to buy Walmart about 2 days before Thanksgiving and to sell 3 or 4 days later. Year after year, Walmart, just like a lot of retail stocks, always tend to rally at that time. And it makes sense because of the Christmas sales that start on Black Friday right after Thanksgiving. Here's another familiar example. Wheat is harvested in the fall and people barbecue more pork and beef in the summer. What do you think that does to the price of those commodities? They tend to rise. Here's another one, Coca-Cola, KO, also rallies more in the summer than in the winter because people drink more Coca-Cola Classic in the summer months. So whatever your market is that you follow or trade or analyze, you can typically find its seasonal pattern. And here is that example of Coca-Cola on a weekly chart. Consolidating and then rallying into the summer month in a predictable, methodical fashion, following its cyclical seasonal patterns. So let's look at the case study. Let's look at the case study I mentioned in the beginning so you can see exactly what I'm referring to. This is a weekly chart of crude oil on a continuous contract basis. This chart dates all the way back to 2001. Notice all the little green circles on this chart. That's where I've highlighted these cyclical patterns that we're talking about. And you can see for the last 18 years, from December 2001 to December 2019, crude has followed the same cyclical or seasonal pattern, which is driven by supply and demand. So it's pretty clear that crude oil, just like most energy stocks, really classified as a seasonal market. So here's why this matters. Unlike what you may hear on the news from the talking heads or so some call it expert, the demand for crude remains relatively stable throughout the year. However, it really starts to pick up as we enter the new year. So to meet the upcoming demand of that time period, distributors will begin to stockpile supplies as early as January. So while the refineries are shutting down briefly to prepare their supply, their doing so usually leads to an immediate boost in prices until the facilities are back in full operation, which is the cause of these explosive spikes we see on this chart. But enough about the fundamentals. Let's get into the trading opportunity and how it can benefit you. And also, can I get one more sound check, if you don't mind? I had a thing pop up say I lost internet connection. All right, everybody says sounds good. I'm gonna keep rocking and rolling. I get very nervous when I see that. So we know that this is a consistent, predictable pattern that's held true for the last 18 years. Does that mean it's going to work this year or the year after? No. You know as much as I do, nothing is guaranteed in life and certainly not in trading. Nobody can predict the future. However, this is a high probability pattern that would be a smart trade to make. It's worked over the last 18 years. And I can guarantee you that I wait for this setup every year, as do our students and members. And the good thing is that it's only one market. So if our goal was to simply try to stay on the winning side when we trade, making trades following historical and seasonal cycles that have proven themselves over and over again is not only logical, to me, it's just plain smart. You may be wondering, what would you have pocketed from this trade? Well, that of course depends on what instrument you're trading, how many contracts, your account size, where you exit or manage risk. The point is, did you know where the trend was likely headed? Did it Did it get and keep you on the right side of the market? The answer is yes. So to give you an idea here, crude oil with each futures contract represents 1,000 barrels. Each tick or minimum move is worth a penny per barrel or $10 per contract. So a full point movement equates to $1 per barrel or $1,000 per contract. So from 50 to 55, that's $5 or $5,000. From 50 to 51 is $1,000. $50 to $50.50 is $500, so on and so forth. So that means each of these four moves you see here were worth roughly $14,000 to $15,000 per contract traded. And similar moves have repeated themselves over the last 18 years. So with opportunities like that, doesn't it make sense to trade with the trend, to follow historical data and cyclical patterns with your trades? And the answer again is of course yes. So having spotted this seasonal pattern, you could have traded the following. You don't have to move the family to Chicago, take delivery of crude futures. You could have traded USO or a multitude of other leveraged and unleveraged ETFs, energy stocks, energy ETFs, and of course, crude futures, crude options, mini crude, CFDs, and more. So now you may be thinking, Silas, that sounds great, but it's easy for you because you know how to read those charts, you know what to look for. What do I need to focus on in order to find these patterns? And that brings us to our second big idea of this presentation. That's understanding what data you must focus on and what data you can ignore so you can continue to trade in confidence. Because let's be honest here, there's a lot of information, a lot of techniques or quick fixes, and it's really easy to get overwhelmed and not know where to start. So before we consider what you need to focus on, let's address what you need to ignore. Popular but completely unreliable sources of trading information include talking heads, planetary movements, market wizards, and annoying neighbors. We're not going to trust Ned Flanders with our family's financial future. So the first step is to cut out all the unnecessary noise. Then I want you to memorize and follow the focus formula. What the heck is the focus formula, you ask? Well, it's simply X plus Y plus Z equals consistent profits. All the information you need. Well, let's dive down into this formula. It's the three most important things you need to pay attention to. The first part that we've been talking about is historical data. And that's just looking at the past in order to see the future. So the key things you want to pay attention to are the time of year, the dates, what the stock, commodity, currency has done over the last 5, 10, 15 plus years, and of course, global events that may affect the underlying. And that couldn't be even more true in today's current market environment. So knowing when these unique dates and times, these calendar windows are, it will help shave years off your research process. You've probably heard it before, Santa Claus rally, sell may go away, January barometer. Knowing these specific times of the calendar windows, when to be long, when to be short, or perhaps where to be flat, give you a huge edge over your Main Street buy and hold financial advisor. You could also drill down even further into sectors, using the same logic to figure out why the top performing sectors typically outperform the S&P 500 over the course of a year. Are you familiar with the term sector rotation? You can bet you know what the top institutional money managers, hedge funds, pension funds do. We're talking about hundreds of millions of dollars, if not billions of dollars, of inflows and outflows at specific times of the year across these sectors. Because stocks, as they always do, follow money flows and they fluctuate in ways that echo the past. What about industries? Why do you think real estate stocks thrive at specific times of the year, or airline stocks? What about energy related stocks, home builder stocks? Your brain should be spinning by now, but in a good way, because we, like the market, move in cycles, predictable cycles, month after month, year after year. And that leads us to the last group, commodities, which in my opinion have even greater seasonal tendencies because they are markets that are tangible, physically consumed, grown, planted, harvested, and are dependent on the worldwide supply and demand at various times of the year. Can anybody give me some examples? What about cocoa in February, gold in December, grains in the summer, meats in the summer that we already talked about? So that leads us to the next part of the focus formula, and that's technical analysis. Because let me be honest with you, using seasonality as a standalone tool to make investment decisions is not really recommended. Is it powerful? Does it perform better than other strategies? Yes, we've already proven that. But I want you to look at seasonality as a useful analytical tool and use it in conjunction with fundamentals and technical analysis. So we know that we're looking for seasonal or cyclical patterns that are at least 70, 75, 80+% profitable. We also prefer to trade technical patterns that display a 70, 75, 85% win rate. We're talking about time-tested seasonal patterns combined with time-tested technical patterns. Your chances of choosing a profitable trade are greatly enhanced when both of these methods of analysis are combined. Let's talk about a few high probability technical patterns. Most of you are probably aware of this, but I want to at least show those that aren't and give them the opportunity to see how powerful these are. Head and shoulders, technical analysis 101. This is a daily chart of cocoa futures. Left shoulder, neck, head, neck, right shoulder. We know on a head and shoulders top, we're looking to get short on breaks or closes below the neckline. What about 1, 2, 3 tops and 1, 2, 3 bottoms? One of my bread and butter strategies. I like these, not that I don't like the others. These just happen to appear more often. Gives me more trading opportunities. Here's the same daily chart of cocoa futures. 1, 2, 3 bottom. We know we're looking to get long on breaks or closes above the number 2. Notice here, same embedded in the head and shoulders top. We have a 1, 2, 3 top, breaks down below the number 2 or the neckline, and we're off to the races to the downside. Double tops and double bottoms don't really need much explanation, pretty self-explanatory. Here's a weekly chart of deer. Top, top, double top. We know on a double top formation, we're looking to get short on breaks below the W or V line, okay? And then lastly, pennants, triangles, and wedges. These are just very common, very high probability technical patterns. Here's the same chart, weekly chart of deer. Here's your triangle, your wedge, your pennant, whatever you want to call it. We know in this pattern, we're looking to get long on breaks or closes above the trend line here, and we're off to the races. That brings us to the third part of the focus formula, and that's good old-fashioned common sense. Common sense would tell you not to randomly buy or sell a market just because of a date on the calendar. Common sense says while pizza stocks may be affected by the Super Bowl, you don't go bet the family farm on Papa John's every February 1st. We must wait for the market to confirm that a seasonal move is underway based on what the chart and the market is telling us. And that's why I came up with the focus formula. After spending years analyzing, researching, trading the markets, I found that the closest thing to the ever elusive Holy Grail is to use plain and simple common sense in your approach. There are about as many indicators in the marketplace as there are cryptocurrencies. And you know what? Most of them are worthless. What you need is a high probability historical pattern confirmed by a high probability technical pattern paired with a level head of common sense. These three things are what I call the perfect marriage in trading and will help set you up for success. So here it is, again, the secret formula. Write it down, tape it to your forehead, put it on your window. Historical data plus technical analysis plus common sense equals consistent profits. All the information you need. So you may be thinking, that sounds great, but how can I find those setups so quickly? Trust me, nobody likes to spend all day stuck behind your screen, or most of us don't. That brings us to the third big idea, and that's how you can shorten the amount of time you spend analyzing charts. So now that you have your strategy in place, you're ready to take action, what next? How do we even begin scouring through years or even decades of stocks, futures, currencies, data, patterns, cycles? What if there was a push button solution, literally a scan and go function that could lay out years of historical data for you on a silver platter? So type 2 in the chat box if you'd like to have that opportunity. I'm gonna take a swig of water here. All right, bunch of 2s. Good, excellent. So this solution I'm talking about a push button solution that delivers the following. A symbol, that's pretty important, right? What the heck are we trading? What about the bias? Fairly important. Should we be looking to go long, short, maybe flat? What about a suggested entry date or suggested exit date? That would be pretty helpful. everything that helps provide the framework for my daily process. That's precisely what we did. We developed a scanner, and we call it the Smart Seasonal Scanner, Smart Market Scanner, to allow technology to do the heavy lifting for us. So rather than manually looking through decades and decades of data trying to spot these patterns, we now have a tool that searches historical trends and patterns for us and helps locate setups that meet a certain criteria of success. So whether you trade stocks, futures, or Forex, ETFs, options, or commodities, there is now a push button solution. So let's dive in and see how this works. Let's go to the scanner. So how do we do it? This tool will allow you to choose all of the key relevant information you need, like which month or symbol you wish to see the trend for, as well as how often the trend should win. Do you only want to see bullish setups, bearish setups, or both? How long do you want the seasonal trend to last? A minimum of 7 days, 10 days, but maybe no more than 20, 30, 40. You click search, and what would take years to deliver is now done in seconds. And you're not just limited to only a symbol, an entry date, an exit date. In fact, there's enough data here to create an entire computer model. But as I said, I like to keep things simple. So let me show you how I use it, and we're going to go through the key components of this software. So give me a moment here, and I'm going to pull up Smart Forex, Smart Futures, and Smart Stocks. So I know I'm asking you to do a lot of work, but do me a favor and type something in the chat, anything, and let me know that you can see these scanners. I was in a presentation one time and my screen froze when I brought these up, and it was a nightmare. So I still have those dark thoughts with me. All right. Don said something. Philip said anything. I'm going to take it that you can see the scanner. So let's take a look. So look, we do not need to make things complicated. This is pretty simple, but let's talk about what all this data is and what it means. So everywhere that you see these windows or these boxes or these fields, these are areas or criteria that you can manipulate, or you can put in your own data. So if we want to search by month or symbol, we do that here. So we search by month, and you can see we now have seasonal data going all the way out to March of 2021. If we want to look for by symbol, all we have to do is use the scroll feature here, or we can actually, type in a symbol of our liking. Okay, now, once we know that criteria, let's say that we want to find trends that have won at least 85% of the time. You could choose 70, 75, 95, and we want to see both bullish and bearish, or you could choose either bullish or bearish, whatever you want to look for. And we want to find trades that have lasted at least 10 trading days right here, but no more than 40. So our focus is kind of a more shorter term to intermediate. If you're interested in maybe trading weekly options, you could find trends that last at least two days, but no more than 7. And if you're more of a position type trader, you can expand that out even further. And we want to find trades that have at least 7 years of data. You can go down further and you'll find less opportunities, or you could go up to at least 10 years or even higher. So based on all this criteria here, we then hit search, and you can see that it yielded 727 results. I don't know about you, but that is a lot of symbols. So you have the ability to play around this and extract as much data or as less data as you want to see. So now that we have our data input into this table, we've got all of these columns of data. Your score right here is base 5 being the highest probability, all the way down to 0.01, which is lowest probability. That doesn't mean that they're bad trades. It's just based on a probability scale. So you can see here we have trend, symbol, company, start date, end date, risk reward, average profit in dollars, percent, max drawdown in percent and dollars, biggest profit in percent and dollars, sectors, industry, whether they're optionable, and so on. And all of these columns are clickable, so, or sortable, I should say. So let's only see trades that have won 100%, and we want to go down that way. Or maybe we want to see a start date of May 1, or maybe we want to see highest scoring first. Okay, so once we have that data, we can also customize our columns. So here, if we don't want to see some of these things, maybe it clutters up our charts, whatever, you can remove or add various columns. Okay, so pretty simple. Now, notice that when I click on each of these, I'm getting various data down below. So if I click on here, I'm getting different tabs. So when I click on take two, this is basically your equity curve. If you had taken this trade every year for the last 7 years on the suggested start date and exited on the suggested exit date, this is what your equity curve or equity graph would look like based on 100 shares. And you can change this if you want to do so. We'll talk about that here in a couple moments. If you click on this button, it's going to show you your year-to-year profit table. Think of it as like a candlestick. So the high of the wick being the max equity or gain during the life of the trade, the low part of the wick being the max drawdown during the life of the trade, and the top of the green where you landed is from an equity perspective where you closed out either in profit or in loss. This is your probability graph. The more green, the better probability trade it is. And then this is a year-by-year breakdown, just showing you the begin date, begin price, end date, end price, your max drawdown during the life of the trade, and your closed P&L based on 100 shares. So let's say that we like this trade, this trade, and this trade, just for example purposes. We can then add to step 2. That takes us to the portfolio tab. Here is where you can do further analysis running the neural network scanner. So using the neural network scanner, it's going to factor in all kinds, dozens and dozens, if not hundreds of criteria based on historical and seasonal data performance, as well as what's going on in the current market environment. So if we click user preferences here, this is what I was talking about, where if those stats were based on a quantity of 100 shares, if you want to change that to 250, 500, you can do so. Or if you want that based on a hypothetical or live account. So if you have a demo account, you could put your balance in there, or if you have a live account, you could put your balance in there and choose this to base on a percent trade basis, say 1%, 2%, or maybe 5%. Okay, then you have the ability to adjust your neural network risk tolerance preferences, and you can see what that means here in this help guide. Once you have your final settings, you hit calculate now, and it's gonna calculate the probability factors based on your risk tolerances. Okay, and let's say that after we do that, I'm not going to calculate for the sake of time, but let's say that we end up only liking these two. Maybe this is a high probability, medium probability, maybe these are low probability based on the current market environment. Okay, so we have check, check, and then we hit added trade alerts. So now we go to the trade alert tab. Here we can now customize our own alerts based on the settings. We can have these sent a day prior to the suggested start date, 2 days, 3 days, 5 days, and you hit schedule alerts, and they'll come to you based on how you set them up. So here you can have them come to your email address, or you can put a phone number in here, and they'll be sent to you via SMS text. Okay, pretty simple stuff. Now, so this search criteria did not scan the entire market. It only scanned what I had set it up to scan under, and that was under the S&P 500. Notice here through the drop down, we have the NASDAQ, Dow, exchange traded funds, and then all of these other various sectors. So if you only wanted to search under financials, you can see there's 301 stocks under financials, 342 under consumer goods, 296 under technology, and so on. And you can create your own customized watch list based on the stocks in each of these sectors or indices. Okay, so the same thing, the exact same things that we just covered apply in futures, other than under settings, you're going to have your different commodity groups. So here we have currencies, energies, financials, grains, indices, meats, metals, and softs. You can customize your own group there. And then in Forex, you know, it's just Forex. It's all the currency pairs, and maybe you don't want to, I don't know, look at the euro yen and maybe the pound Aussie. You can remove those if you wish. All right, so let's get back to our slides and our example. So once we find this criteria, the prudent thing is to now go into our charts. So when I found this particular symbol, TDG, I went to the daily chart, and this is what I found. So I found that the market was consolidating in a range between the 50 and 100-day moving averages. So not really bullish, but not really bearish. We know from the data we just ran, we had a high probability seasonal setup that suggests it was going higher. So all I did was draw a box around this consolidated area or congestion area and waited for the market to do something. The market reacted and it busted out above the 50, above the consolidation range, and that's where we got long TDG. How? Buy stock, buy call options, call spreads, or sell out of money put spreads. And also, I forgot to mention, you can also check and see what it has done in the past or is currently doing within your portfolio tab inside the scanner. You can see the suggested start date and the end date for that time frame. Here's another case study on MAC, actually a bearish trade. We can see the year-by-year breakdown, our average profit, the risk reward. It looks like a nice trade. We can see the year-by-year breakdown here, winning trades every year except this small drawdown in whatever that is, 2014. We like the trade. We go to the chart. The trade is confirmed. We're in a downtrend. We're below the 50, 100, and 200 day, but we're trading somewhat counter seasonal. We're trading up, we're trading higher, the trend is down, we're trading up and into the 50-day moving average. What happens? We sit and we watch. We wait and we watch, and we get a reversal candle here at the 50-day moving average. Get the reversal candle, that's our signal or confirmation to enter. We sell MAC, we buy put spreads, we buy puts, we sell call spreads, however your style of trading is. Here's another one on cocoa futures. Suggested start date of 6/1, suggested end date of 7/15, 92% win rate over 12 years. Looks pretty good. Let's see what it does on a year-by-year basis. We have losing trade here, losing trade here. By looking at the average drawdown and average gain helps give us an idea, excuse me, or insight of where we should put our stop and possible targets. So I go to the cocoa chart. Very similar to the MAC example, but only to the flip side. The trend is up, we're above the 50, 100, and 200 day, but now we're trading down. I love when these setups occur. Market's trading lower, puts in a bullish pin bar or reversal bar here into the 50 and 100 day moving averages, followed up by a bullish candle, our confirmation to get long cocoa. Buy cocoa futures, calls, call spreads, or selling put spreads, okay? And then last study here on Forex, the pound yen, suggested long trade on 9/8, suggested end date of 9/19, only about a 12-day calendar trade, 86% win rate, average profit's been about $2,900. Looks pretty good to me. Let me see what the year-by-year breakdown does. We have this, I would call it probably anomaly, because this is, I think, during the Brexit. So I'm going to ignore this and then take the trade. So I go to a daily chart. The overall trend is down. What are we doing here? We need to see if we get a reaction at the 50-day. We do. We get a large bullish candle telling us that the buyers are stepping in. We're able to get long the pound yen. And notice that the suggested exit date is 9/19, which is right here. What happens in 9/19? Market tops out and falls back lower. So let's recap what we've covered. You're introduced to the powerful practice of using historical data to guide your trading behaviors. You've also learned about the focus formula, what is literally my holy grail of trade, to understand what data you must focus on and what you can ignore. And you saw several different ways you can shorten the amount of time you spend analyzing charts, all while finding hundreds of high probability setups that you can take action on. But let me ask you a question. Now that you've heard several different ways to shorten the time you spend researching trades, how would you like to get access to this scanner and alerts mentioned today? Look, I went into the lab because I had members and students clamoring for something like this, to build something like this. Hell, I even wanted something like this, a push button approach that would hand me high probability trade ideas on a virtual silver platter, almost spoon feeding me like a baby. But let me ask you another question. What if it could even help shorten the amount of time and the learning curve for you and have somebody scan and trade these by your side each day? So type a 1 in the chat box if you'd like to learn more. All right, awesome. You're still alive. So we do have a push button solution for you, and you've seen it. I've already mentioned letting technology do the heavy lifting is one method to speed up your historical research. But in addition to having your own software scanner, I'm going to provide even more analysis and spoon feed even more actionable trade ideas to you, sent via video, email, and SMS text. So starting in 2018, I started offering alert service. And these alerts include trades such as these long trades in nat gas, short trade in Twitter, short trade in the Japanese yen. We're going to take a look at what we've done recently just so you can get a better idea, a better flavor of what's going on. So all the methods described throughout this presentation are yours at the push of a button. So here are some unsolicited testimonials. These come in all the time. I don't ask for them. I'm very pleased and humbled that they do come in. And most importantly, I'm happy to see that people are actually taking action. So that's why I'm very proud to offer and introduce to you the Smart Market Scanner Premium Package. The Smart Market Scanner Premium Package is your time-saving solution to finding hundreds of high probability setups in just a few minutes each day. So I've been able to put a very special offer together so you have everything you need to take action on what you just learned. So let me share with you what you'd be receiving in this package. The first off is the Smart Seasonal Software Bundle. These are actually 3 separate scanners in the bundle, one for stocks, one for futures, and one for Forex. And yes, it's the exact same software you just saw me demonstrate during this presentation. You have the exact same level of access to the tools that I do. It's going to help you identify seasonal trends that can be identified at a glance with a click of a button, all by pulling from decades upon decades of data. As you've seen, it offers very detailed statistics showing you your optimal entry, optimal exit, and optimal duration hold time. Only the most important information you need to make a decision. And it does the math for you, calculating your projected profit, projected drawdown, as well as your average daily profit, daily gain, and daily drawdown. So with the Smart Market Scanner Premium Package, you're going to get access to all 3 of the software programs included, stocks, futures, and Forex, as well as multiple training videos and strategy guides. You get full access to all 3 software programs and the additional training, and it's valued at $596. Next, you're also going to be given full access to the SST Pro Trade Alert service. So with this service, you're going to be alerted to other high probability setups via both email and SMS text, as well as be given access to a trade tracker, Google Doc, to see the archive and history of each trade. In this service, I analyze over 100 stocks and ETFs, 35 commodity markets, and 35 currency markets. The real-time value of this is $1,167. Here are some examples of real trade alerts that were sent via email and SMS text. You're going to get access to these during the life of your membership program. You can see everything from stocks, options, ETFs, and futures. We don't leave you hanging. We don't feed you the wolves. We're with you from beginning to end on each and every trade. Next, you're going to be receiving monthly member bonus sessions where you can ask me questions directly on the call. We run through scans, we look at live charts, discuss upcoming seasonality plays, both short and long-term opportunities, as well as different strategies. These sessions are available to you. They're archived and placed in the members portal for your viewing convenience 24 hours a day. And our next member session is next Thursday. I'm also going to be providing exclusive members only scan updates and additional training videos showing you exactly what data I'm researching. These scan updates are provided every week. So as part of that package, you're going to be receiving these weekly additional current trainings. These weekly updates are valued at $3,900. So that's everything. The Smart Market Scanner Bundle, the SST Pro Alert service, the monthly members only sessions, weekly scan updates plus videos. The total value is $8,052. But I also want to include a few additional bonuses to reward those who are taking action. First is my chart pattern principle course. It's a 90+ page PDF manual with additional strategies, patterns, seasonal trend setups, and much, much more. Also going to be including my 25 top option strategy guide. This is really helpful for those that are just dipping their toes into the world of options, as well as those that are more seasoned. Literally strategies for all skill levels, from basic calls and puts to more intermediate advanced, such as condors, verticals, diagonals, butterflies, and more. It's valued at $147. And for serious people today, I'm going to offer VIP email support. And this is VIP email support from myself. I'm not a robot. I am a human being. And just so you know, I handle all of my own email support. I do have a team that helps me manage it, but I do read everything that comes in. I value my students and customers. So this is not something I can give away to everybody because there's only so much time in the day. But for the first 25 people who join, we're going to include VIP email support. So here's the Smart Market Scanner Premium package again. Smart Market Scanner Premium, all 3 software pieces, the SST Pro Alert service, monthly members only session, weekly scan updates and videos, chart pattern principle course, 25 top option strategy guide, and VIP email support. The total value is $8,893. Let me ask you this. If all it did was help you improve your record to generate more wins and losses, what would that be worth to you? If all it did was allow you to unsubscribe to other tools and newsletters that you aren't even using, what would that be worth? If all it did was help you place 1 to 2 winning trades a month, what would that be worth to you? I'm not going to obviously charge you $8,893, even though we both agree that would be a fair price after looking at the software and the trades that the service has delivered. I'm not even going to charge you half of that. I don't want cost to be a barrier to your success. You've already seen what the software can do, the probability of the alert service, and how much time it will save you. So today, this live webinar price, I'm going to offer this package at $347 a quarter. The offer link is seasonalswingtrader.com/VIP, seasonalswingtrader.com/VIP, and it's $347 a quarter. So I'm gonna put that link into the chat for you. Give me one moment. And for those that stick around, I'm super excited to show you some of the trades that we're looking at, as well as the last, say, handful of trades. So here's your offer. Smart Market Scanner Premium Package. It's $347 a quarter, seasonalswingtrader.com/VIP. Feel free to type in all of your questions. I've got lots coming in, and I'm going to get to each and every one of those. So what all do you get? Again, you're going to get 13 training videos broken down into bite-sized nuggets, plus a printable PDF manual, as well as monthly member bonus sessions. So these modules that you see here, you're going to see that in the members area. And I'll take you to the members area momentarily. But we've broken these pieces out into 2, 3, 4 minutes long. We don't need recordings that are 45 minutes, an hour long, or even more. You saw how simple it is. These just go into a little bit more depth of the inner workings of the software scanner and how you can use it in a way that suits you. And here are your other bonuses in the members area that you'll see upon logging in. And let's just recap here or end this with the process. It's really boils down to 5 things. What month are we looking in? What symbol should we look in? What's the winning percent? What's the risk percent? Do we want to be bullish, bearish, maybe both? What time frame should we be looking at? And then we scan for the results, we do our analysis, and we enter the trade. All right, so let me get to your questions here. Does not require data feed. I get that question a lot. Does not require data feed. It's broker and platform dependent, or independent, I should say. You do not need to be connected to any brokerage, any platform, any kind of data. The data is built in. It's literally about a one-click download for smart stocks, smart futures, and smart forex. We do have somebody that can help you install. Sharon, email me at support@seasonalswingtrader.com. Email me at support@seasonalswingtrader.com. That's my email address for anybody else that has other questions. Let's see. All right, thank you, Craig. Can I please show how to place option trades for one of your instrument or indices or futures based on the seasonality? Absolutely. We'll get to the charts here in just a second. Is that a GS in the background? I'm not real sure what you're referring to, Richie. Let's see here. Another question about options. Yes, use this to trade options. Absolutely. All right, let me go to the members area. There's the offer link. Once again, you should see it, Ned, there in the chat box. Let me get to this for you. All right. Let me bring this over here. All right, so here is the members area. Once you log in, you're going to go to Smart Market Scanner Premium right here. You're going to get access to Smart Market Scanner Premium as well as SST Pro. Here is our monthly scanner watch list that we upload at the beginning of the month. We upload these for basically just uploading them from the scanner. You can see we got stocks, futures, and forex. You can click those tabs. But again, you're going to have access to the scanner so you can do your own. Here are the downloads: smart stocks, smart futures, smart forex. No, Ellis, we do not. It's not available for just one asset class. That's either you get access to all. If you don't want to download, stocks, if you only trade forex, you can just download one or all of them. I encourage, like I say before, I would encourage learning all asset classes, whether you trade stocks, futures, or forex, or maybe all, learning to diversify markets, especially when we saw the volatility, over the last month and a half. We're able to go into some of the commodity markets, some of the currency markets, some of the markets that are uncorrelated. Now, there was a lot of spillover last month and in March because of the extreme sell-off we had, but there were ways and opportunities there for sure if you are a little hesitant to jump into the equity market, and I don't blame you. Here's your trading manual. It's 40 or 50 pages. You can read this, open up a separate PDF, download it, print it out. I will say this right here, you may get prompted to download a Java thing when you go to download the platforms. But here are all these training videos, again, 2, 3, 4 minutes long. Here's even one on day trading with the Smart Market Scanner. I'll tell you, I don't use the Smart Market Scanner to day trade. I don't use seasonality in day trading. I realize that there are certain days of the week, maybe times of day to go long this instrument, go short that instrument. I use seasonality as intermediate to longer term outlooks, swing trading. Do I have my yearly favorites that you keep trading? Oh, absolutely. Good question, Jonathan. Yeah, absolutely. There are some I definitely have some go-to seasonality trades, both in equities and in the futures markets. In fact, we're gearing up right now. We just closed a $5,300 trade in crude oil and still open. Crude oil trade is still open. We're long a couple of grain markets heading into the summer months, and we know that we're going to be quick to get in and get out and then turn around and look for short opportunities in the grain markets. There are some incredible patterns, seasonal cyclical patterns that repeat themselves year after year in those markets. Let me see if I'm able to pull those up without losing anything. And let's just go to the charts. Let's see here. So here's a trade, all right, so talking about crude oil, we got long crude oil. We exited yesterday. We were long from 19, exited into the 24 half range yesterday for $5.30 profit, $5,300. We also have been talking about getting long sugar, very high probability sugar trade coming into May. We've been pointing out this divergence here. See lower prices, higher RSI, hence the divergence. We've made the move, pulling back. We'll be looking for potential new entries there. Here are our last 5 trades, and we're still in some open positions here. We got long the Canadian dollar here on 319. So I'll leave that right there, and I'll move this right here. And let's recap. I don't get married to trades. We'll get in and move on. So we got long on 319. And you can see, everybody manages their trade differently, but you can see the move there. Cocoa, we got long on 324. Let's go to July cocoa. Got long on 324, which was right here. You can see the potential move there. We recommend right here up over 100 points to tighten stops. And look, folks, you don't have to trade commodities or futures. You do not have to trade commodities or futures. You could have traded NIB, the ETF in cocoa on that Canadian dollar. You could have traded FXC. And every time that we issue one of these ideas, give you the corresponding ETF. So wheat, talked about getting a short in July wheat on 4/1. Let's look at what happened in wheat on 4/1. These are all called before the fact. There's no hindsight, okay? 4 is 4/1. We got like 4/1. All right, here we are. Got short wheat. You see the move that we've made there. See that we got long RBOB unlead gas on 324. RBOB unlead gas. So here we could have traded WEAT, which is the ETF that tracks wheat. And then RBOB unlead gas, there's an ETF called UGA that you could have traded. Here's RBOB. got long on 324. Where's 324? Right here. See the move that was made. Those are multiple thousands of dollars in potential trades. And then we got short gold on 416, and we banked $30 or $3,000 a contract. We got short on 416, which is right around in here at 1733. We recommend closing out around 17 to 1705 for, you can see, $30 plus $30. A couple of other trades that have just appeared on the radar. A lot of potential energies shorts coming up. Let's look here. CVX is one that that we will be talking about next week in the member session. XOM, again, these are all to the short side, waiting and watching for certain things to happen. CTX, another bearish trade that I'm watching. We had a bearish seasonal scan here. Let me see if I can find it. Why don't I just do this? CTSX. And let's do the start date. And here's that trade. Here's that trade. Bearish start date on or around May 13. All right. So if we go back to the chart, I'm watching CTX. Got price alerts in. I don't have to do anything. I'm looking. What am I looking at here? What do we talk about? Head and shoulders tops, high probability patterns. Head and shoulders top, 1, 2, 3 top. I've got price alerts. I know that if we break below this neckline or the number 2, it's a high probability trade. I know our target objective in these patterns is a measure from the head to the neck and then down. That's a $10 move from about 140 down to 130. Where does that take us? This is not coincidence. Where does that take us? Down to the next key area of price structure. So you can bet, you know what, we'll be getting short and we're going to be targeting down in that area. These are some of the things that we do, that we talk about. Let me see a couple of bullish potential trades coming up based on the scanner that I'm watching is CMCSA. I've got these levels already drawn out here. I've got price levels here at 34.5, 34.75, waiting for it to trade into this price structure. Also happens to be a 618 retracement to line up for that extra confluence with seasonality. BSX, another trade I'm watching. We have a bullish scan on BSX, Boston Scientific. Bullish trade right here. Highest scoring trade possible long on May 14. We know they don't happen exactly on the date. You can wait and get in right on the exact date. I don't think that's a prudent thing to do. So I'm watching this. You can see I've got price alerts drawn out here for a break above this triangle, which would carry on upwards above the 200-day and on to retest these old highs. So I hope that gives you an idea of what kind of my thought process, my analysis, and how I'm looking to take advantage of these seasonal trades. So Jonathan, I kind of went on a tangent there. Hope I answered your question. Gerald, not sure about Jake's service. I don't, I mean, I've heard of him, don't really know much else about it. How much capital do you need to swing trade futures or commodities? Really all depends. So and that's not it's not to try and dodge your question by any means. So a lot of these markets have micros or mini contracts. So you're going to see we also have access to SST Pro, and inside this members area, I'm going to show you what you have access to on SST Pro. So what you can do here is here's an SST Pro. You're going to get these docs, how to trade the alerts, how to trade alerts video. But this is what we what I update every Sunday. Update every Sunday and send this out. I send an email out saying, hey, the Sunday update is ready. And you log in and you're gonna see the scans that I have culled for the week. My top 10 scans here: 3 bullish equities, 3 bearish equities, 2 futures, and 2 Forex markets. So you're getting a minimum of 10 ideas every Sunday, every week. And then I do a follow-up video either on Sunday or Monday where I go through every one of these and I break them down. I say, this is what I'm looking at on each of these. Excuse me. Okay, and then throughout the week, we may issue additional ideas. So I would say 10 plus is about on cue. I mean, 10 is a bare minimum you're getting, but we might have other ideas that come to you throughout the week. So to answer your question about where was I going? Oh, so on this sheet here, you can go over to let's see, future symbols, and you can see where I've kind of broken down. I've showed you that, okay, these are the markets that have ETFs on them, and then this is the value of these contracts: the Aussie, the pound, S&P, corn, beans, crude, so on and so forth. I got details in here on those that have mini contracts as well as micros. So right now, there's only micros on the currencies and the indices, and then there's minis on the euro and yen, corn, beans, and wheat, these energy markets and these metal markets. So as far as minimum account size, all depends on if you're trading the full contract, full size contract, the minis or micros, or if you choose to trade options. So you can trade, limited risk, just basic calls and puts, right? So buying calls, buying puts. So if we say, hey, we're looking to get long crude oil. We're looking to get long crude oil. Let's go to, we can look at any of these markets. Let's just go to crude. If you're looking to say, hey, we like crude, which is what we did last Thursday. We just got into that trade last Thursday and we exited yesterday. So here, this is where it just comes down to you as a trader, what you're comfortable with, what's your risk tolerance, your knowledge of the markets. We've got people that will trade a multitude of things. We've got people over in Europe trading CFDs. We've got people that will take that idea and say, okay, I'm going to buy a USO, or I'm going to come in and buy a 2 times leveraged crude contract, or they're trading crude futures outright. Maybe they're buying futures, maybe they're buying mini contracts, or you could go in and buy crude futures options. Of course, you could trade options on USO, trade options on other ETFs. You could even trade energy stocks, or you could trade futures options. So it's really hard to say. But if you're asking, if you want to hard press me for a number, which you're not, I'm just saying if you were to, I would say, probably 10,000 really makes sense. 10,000 up makes the most logical sense. Then maybe if we're going lower, maybe 5,000, and that's where I would focus on just trading options instead of the underlying. So going out, some of these options can get rather expensive, especially during times of implied volatility. So the way, this is kind of getting off of the reservation here, but where you can start with a smaller account, if you choose to trade futures options, is buy strikes. I always encourage people to buy strikes as close to or in the money as possible that they can afford with the highest delta. Alternatively, you could buy strikes of what your intended target is. And sometimes we'll leave the target open because we just want to leave the target open. We want to kind of give the market room to breathe. But in, say, a 1, 2, 3 bottom example, we know that our target is the distance between the 2 and the 1 measured up. So we would know, here's our 2, we know our target is going to be right here around $29 measured up. So if you're buying, if we get long around say $22, we could look to buy a 28 or 29 strike price for a lot less. Buying a call option down here may cost you $1,000, might cost you $2,000. This may cost you $500, may cost you $400. It's going to theoretically be a lower probability trade because of the natural way the option works through time decay. But that can be a way that can also help grow your account if you manage it properly. Hope that makes sense, Jonathan, or helps. Yeah, Cherie asked about an ETF or alternate for sugar, and it's SGG. So some of these ETFs and ETNs that track commodities are really, really illiquid. Some of them don't even have options on them, and those that do have really wide bid-ask spreads. So just be careful, use some common sense. Don't go pay market or sell market if you're trying to exit, because you're going to get just reamed by the market makers there. The spreads get really wide. But you could trade the underlying. You may be more exposed to gaps than maybe the futures markets. You can certainly see gaps in the futures markets, but you can also see gaps in the ETFs too. You see, look at this on well, unlead may be a bad example because of just the extreme selling we had going on there in March. But let me look at JGG, JJG, the copper. No, it's grains. What is let me see what copper, I forgot what copper is. ETFs. Let's see, futures. I'm trying to give you an example. Or you could look at palladium. Where in the heck is the JJC? Oh, that's right there. JJC. So you can see it's a little spotty right there. It's just the volume. There's hardly any volume. It's really terrible. But yeah, SGG there. The moving averages are just the 50 and 200. Pretty simple stuff. 50 and 200. 50 and 200 EMA. These are things you can ask me to in the live, the monthly bonus sessions. So next week on Wednesday, we'll have our Seasonal Swing Trader Pro member session. We're going to go through that week's scans. We're going to look at the upcoming seasonality in May for all of the major commodity groups, as well as the major sectors, and kind of what to look for, what to expect based on historical basis. And then on Thursday, we'll have the Smart Market Scanner bonus session, and that's where we're not really looking at the scanner, we're just plowing through symbols. So basically what I've done is I've taken all the scans for May, and what I did is I explained to you this process every month. What I do is I upload those scans, custom scans, in my watch list. So here I've got May bearish, May bullish scoring from 3 to 5, and May bullish scoring 1 to 2. And I excluded everything that scored below a 1. And I've already started going through those, marking up some of my favorites, and we'll go through those and talk about the reasons. So I hope that helps. All right, gang, I think that about does it. Let's see, make sure I answered everybody's questions. I think I did. If I did miss anything, feel free to email me at support@seasonalswingtrader.com. I'll be happy to be more than happy to answer any questions you may have that may come up later today, or whenever later through the week. Email us to support@seasonalswingtrader. Pretty much, yeah, John. pretty much do it on the second Wednesday and Thursday of each month. And then those are recorded. They are recorded and placed in the members area. We send an email out saying they're up and live, and you can go back and view those in the evening or whenever fits your schedule. So if you, for those of you that have signed up, I appreciate it. You'll be getting your welcome emails almost immediately. If you don't, give it a couple minutes, and then you'll also get your welcome or your invites to next week's member sessions, where we're going to dive into more markets and symbols and look for setups coming up here in May. I appreciate everybody's time. Thanks for joining me. I hope you learned something. Hope you saw the value in this. I really love this stuff. I live, eat, and breathe it every day, and I'm here to help you. If you have any questions or feedback, good, bad, or ugly, I like it all. And shoot your questions to me. Whether you're a member or non-member, I look forward to working with each and every one of you. Stay safe out there in the market, as well as through this coronavirus conundrum. Hope everybody has a great rest of your week. Take care, and we'll see you on the flip side.